Bitcoin ETFs, your gateway to the future of finance. Have you heard whispers of Bitcoin but felt overwhelmed? Don't worry, you're not alone. The world of cryptocurrency can seem daunting, but it doesn't have to be. Today, we're going to unlock the mystery of Bitcoin ETFs, a simple and accessible way to participate in the exciting potential of digital currency. Think of this as your crash course in Bitcoin ETFs, designed to empower you with the knowledge to make informed investment decisions. Get ready to embrace the future of finance. Demystifying Bitcoin ETFs, what are they? Let's start with the basics. ETF stands for Exchange Traded Fund. Think of it like a basket holding assets like stocks or bonds. Now imagine that basket filled with Bitcoin. That's a Bitcoin ETF in a nutshell. This basket or fund is traded on stock exchanges. With Bitcoin ETFs, you can gain exposure to Bitcoin's price movements. It's a convenient way to add Bitcoin to your portfolio without managing a digital wallet. Why choose Bitcoin ETFs? Unlocking the benefits. Why consider Bitcoin ETFs? Firstly, security. Investing directly in Bitcoin can be risky. Bitcoin ETFs provide a regulated and secure way to invest. They are regulated by financial authorities, offering peace of mind. You can buy or sell Bitcoin ETFs through traditional brokerage accounts. Exploring the Bitcoin ETF landscape, physical versus futures-based. Now let's delve a little deeper. There are two main types of Bitcoin ETFs, physical and futures-based. Physical Bitcoin ETFs hold actual Bitcoin. When you buy shares of a physical Bitcoin ETF, you essentially own a small fraction of real Bitcoin. Futures-based Bitcoin ETFs, on the other hand, track the price of Bitcoin futures contracts. These contracts are agreements to buy or sell Bitcoin at a predetermined price on a future date. Both types of Bitcoin ETFs offer exposure to Bitcoin's price movements, but with distinct differences. Physical Bitcoin ETFs are considered more directly tied to the underlying asset. However, they may involve higher management fees due to the costs associated with storing and securing physical Bitcoin. Futures-based Bitcoin ETFs, while potentially more cost-effective, may experience tracking errors. This means their price may not perfectly mirror the spot price of Bitcoin. Navigating the risks, a balanced perspective. Like any investment, Bitcoin ETFs come with risks. Bitcoin is a volatile asset and its price can fluctuate significantly. This volatility can lead to substantial gains but also significant losses. It's crucial to understand your risk tolerance and invest only what you can afford to lose. Additionally, the regulatory landscape for Bitcoin ETFs is still evolving. Changes in regulations or government policies could impact the Bitcoin ETF market. It's essential to stay informed about any regulatory developments that may affect your investment. Furthermore, while Bitcoin ETFs offer security and regulatory oversight, they are not immune to market risks. The value of your investment can go down as well as up. Diversification is key. Don't put all your eggs in one basket, especially not in a volatile asset like Bitcoin. Ready to dive in? Your guide to investing in Bitcoin ETFs. If you've weighed the risks and benefits and are ready to explore Bitcoin ETFs, here's a step-by-step guide to get you started. First, choose a brokerage account. Select a reputable brokerage firm that offers Bitcoin ETFs. Next, fund your account. Deposit funds into your brokerage account to make trades. Then research Bitcoin ETFs. Explore different Bitcoin ETFs, considering factors like expense ratios, trading volume, and the ETF provider's track record. After that, place your order. Once you've chosen a Bitcoin ETF, decide how many shares you want to purchase and place your order through your brokerage account. Remember, investing in Bitcoin ETFs should be part of a well-diversified investment strategy. Consider your financial goals, risk tolerance, and overall investment timeline before making any investment decisions. Frequently asked questions, addressing your concerns. Are Bitcoin ETFs a good investment? They can be viable but come with risks. Conduct thorough research, understand the risks, and invest only what you can afford to lose. Bitcoin ETFs charge an expense ratio, an annual fee deducted from the fund's assets. Expense ratios vary by provider and ETF type. Minimum investments vary by brokerage and ETF. Sell Bitcoin ETF shares through your brokerage account like stocks. The process is simple. Knowledge is power.